America's richest are quietly dumping billions in assets. What do they see coming that the rest of us don't? Because when billionaires move before the headlines, it's never without a reason. America's richest aren't panicking, they're preparing, and their preparation begins in quiet rooms like this. In the past 12 months, the wealthy have quietly sold over $50 billion in assets, but not for the reason you think. They aren't reacting to the market, they're reading the signals before the rest of America even sees them. To them, the economy isn't chaos, it's a chessboard, and they're repositioning before the next major move. Because what's coming isn't just a market correction, it's a fundamental shift in how America's economy works. The wealthy aren't running from opportunity, they're running from a shadow most Americans don't see yet. For decades, capital flowed into American markets. Now, for the first time, elite capital is flowing out. They're not buying more companies, more stocks, or more real estate. They're hoarding liquidity, and that's a warning. They see three pressure points converging: inflation, debt, and slowing growth together. They form a dangerous cycle, and according to their actions, that cycle is approaching a moment of impact. They aren't waiting for the crash. They're stepping aside before the rest of us even smell smoke. They want dollars, not assets; safety, not speculation; mobility, not risk. Because the stress points are multiplying across America, and the wealthy are tracking them in real time. They know the bubble doesn't pop all at once. It cracks quietly, until the final break. The question isn't why they're cashing out. The real question is, why now? Beneath America's booming skyline, tiny fractures are forming, the kind the wealthy notice long before anyone else. They're watching data turn from caution to concern. And when wealthy families begin clearing out luxury assets, history says the economy is shifting. Corporate profits are cooling, and America's elite know what comes next. When debt climbs faster than growth, the smart money exits first. They've seen this silence before, right before volatility returns. To them, volatility isn't danger, it's a countdown. That's why they're shifting into the safest investment they can move in seconds: cash equivalents. The compass of the wealthy is pointing in one direction: preservation. Even the ultra-rich are downsizing portfolios, not lifestyles, which is a red flag by itself. Because the pressure isn't just American, it's global. Every bubble looks solid, until the moment it doesn't. And the wealthy know the hourglass is running quicker than before. They're reading recession probabilities, not headlines. And the shrinking American middle class is a sign they take seriously. When consumer debt hits records, wealthy investors see it as structural stress, not temporary struggle. They're locking in safety before the panic phase begins. Commercial real estate cracks aren't loud, but the wealthy hear them. When the elite start canceling deals, dinners, and partnerships, something is shifting behind the curtain. Corporate refinancing pressure is growing, and they're not waiting around for defaults. The economic rope is still holding, but the middle is thinning. When debt climbs faster than growth, the smart money exits first. When spending slows, the slowdown spreads silently. Global tensions are tightening supply chains, again. And fewer ships mean fewer dollars moving worldwide. When credit becomes harder to access, the wealthy step back. They know the economy isn't slowing, it's cooling sharply. America's economic confidence is fading, and they feel it first. The storm isn't here yet, but the wind has already changed, and their dashboards are flashing warnings long before ours. They're reading risks that most Americans won't notice until it's too late. And the future they see is less stable than the one we are living in today. That's why their money is retreating, not disappearing. The US debt curve is bending too fast, and they know it. They don't trust the dollar's strength the way they used to. Economic pressure is reaching levels that historically trigger major resets. And behind the scenes, quiet meetings are happening everywhere. The doors aren't shut, but they're closing. One major event could snap the system. That's why confidence is falling, but cash positions are rising. For the rich, liquidity isn't fear, it's power. And they're moving toward the exit long before the crowd rushes in. Because what comes next will challenge America's sense of economic safety. And when the storm hits, those without preparation will feel it the hardest. So the question isn't why they're cashing out. It's why we're not paying attention.